What's up, everybody? I'm Scott Melker, also known as the Wolf of All Streets, and I'm here with everybody's favorite economist and, of course, crypto analyst, Alex Kruger. Alex, man, how are you today?
Good. Hi, Scott. How are you?
I can't complain. I'm doing great. So listen, the market has been really hard to read, in my opinion, both macro, of course, and crypto specifically. There's a lot going on. I would love just your sort of umbrella views on what's happening at the moment.
I think it's really hard. It's exactly as you said. It's really hard to read. This is a time to be patient, I think, and hold on and wait for things to improve with cash on the sidelines, pretty much.
The Warren Buffett
short
plan.
Term, the Warren Buffett plan, but there is a very clear catalyst coming up, I think, and we're yes, the Warren Buffett plan, but no, because Buffett actually thinks and says repeatedly he doesn't care about the macro and the economy. Not a variable. Don't think about it. Don't time it. I think this is actually exactly the opposite here. We have an extremely bad macro environment driven by very high inflation. So what we're waiting for is basically for inflation to start receding and surprising on the downside, or for the Fed to basically start to basically flip the switch and change their stance, which right now is pretty much as aggressive as it gets. We are gearing up for a very bad FOMC coming up in May. I think it's May 5th or 6th, whatever the Wednesday is. I mean, right now here, I'm looking for a pullback higher, but I think next week the market is going to de-risk again, possibly very aggressively into FOMC. So it's good for me to be a little bit light on risk. On the long side.
Light on risk, but does that mean positioning short if you see a rip here, sort of a sell the rip situation?
Hedge, not. I never go net short. Something I used to do long ago. I don't do it anymore. So it's a matter of style, right? An approach.
Absolutely. I'm the same. And so obviously they say don't fight the Fed, which I think for crypto people for years has meant they're going to keep printing money, get long. But now we have sort of the opposite version of don't fight the Fed, right? Which is that if they're saying they're going to be hawkish, they're going to raise rates, that it's very, very hard to believe that especially risk assets are going to perform particularly well.
Yeah, exactly. And I think there's political motivation on their side. It's that they really have to show that they're being tough on inflation. So the odds of them surprising on the dovish side, I think they're very, very low.
Guys, I have a serious question for you. How much interest are you earning in your bank account? Is it 0.00001% or something similar? We all know by now that there's a better way in crypto, but you want to be using the best platform possible, and that is Vauld. I have been using it myself now for quite a while, earning the highest interest rates in the industry. 12.68% on stablecoins, 6.7% on ETH and Bitcoin, and earning yield on a ton of other assets. But it's so much more than that, guys. They have a robust exchange. You can swap your coins, and they have the amazing automatic investment plan where you can dollar cost average, or more importantly, buy the dip automatically. We know that when the dip actually comes, nobody buys it because they're scared. Well, you can automate that process now with Vauld. Guys, this platform is absolutely incredible. It does everything. They're backed by Pantera and Coinbase Ventures. You really can't ask for anything more. And if you use the link right down below, you get a 40% kickback on trading fees, 5% commission on interest payouts, and 5% commission on loan interest. Guys, sign up right now at thewolfofallstreets.info/Vauld. That's VAULD. Do it now, seriously. It's interesting, though, you say there's political pressure, obviously, to get inflation under control, but we also have a midterm election coming up in November, which means there's going to be a hell of a lot of political pressure, I would imagine, for the market to be performing well, right? If the stock market is crashing coming into midterms, you can't imagine that any of these people are going to keep their jobs.
Well, I actually think that inflation is more important than the market. Actually, the market dropping another 10% would in fact help their inflationary fight. So I don't see that as an issue whatsoever on the stocks crashing side.
So you look for 10% more downside. You're not, but that's not a 50% drop, right? We're not talking about recession and depression there.
Yeah, for me, actually, I think that the lows are likely in. Like at this point, I put like a 20% probability of actually Bitcoin and ETH to actually continue on the low side, break the lows and go into like 30K. I see it as a very low odds scenario, but in the meantime, have to hold on. I mean, eventually the market is going to change, so I have to hold on. It reminds me in a way to December 2018. Basically, everything was an extremely bad scenario. I mean, we couldn't see the light around the corner, and what we needed was basically to Powell and the Fed to flip, and they flipped. Eventually, they always flip. So when that happens, I get aggressive on risk because everybody's going to be chasing this exact same trade, literally try to make up a full year or 9 months in like no time. It's going to pop hard.
Yeah, it popped hard coming out of that December, actually, right? And I remember also that's when we started to see the calls for 50% corrections, depression, and then of course it went completely the other way. It was, I guess, and then in obviously March, April, May 2020, it was very similar.
Yep, I agree. 100%.
Things bottomed out, but then absolutely ripped and never looked back, really.
Yeah, and there's something else here in the market, I think, that is very important. That even though for us in crypto is we all talk about it and is very evident. I think the market as a whole, traditional finance, is not really yet paying enough attention to it, which is the Ethereum merge. I really think is gonna be as big as the biggest proponents think is gonna be. I mean, it has the potential of literally changing entirely the supply and demand landscape on Ethereum and on crypto. We're just waiting basically for the Fed here and get closer to the date. But it's good that we have this very clear catalyst coming up, and it's gonna have some basically Ethereum is gonna basically turn deflationary and offer very high yields that will likely be positive adjusted for inflation, and also be environment friendly, which, you know, Bitcoiners laugh about it. I sometimes laugh about it, about this anti Bitcoin consumption, energy consumption point of view, but it helps. So I think it matters.
It's an important narrative, whether it's real or not. Doesn't matter, because people believe it's real, and that's obviously, exactly, I think, what matters. And Arthur Hayes wrote that sort of incredible piece about, you know, what was it called? 5 ducking digits, I believe he called it, saying Ethereum was going to go to 10,000, basically saying that it would be treated after the merge as a commodity linked bond, right? You'd be able to basically perform the carry trade very easily. You'd be able to earn yield, and basically exactly what you're saying. So you think that $10,000 Ethereum is reasonable or higher?
I'm looking into 50%, plus 50% this year. That's my baseline. If it goes to 10K, 8K, 15K in 2023, 2024, I have no idea. That's not my strength. And actually, I don't think it's anybody's strength. It's just numbers we make up and put on a chart. And once we get there, we adjust positions and try to squeeze as much as possible. So I don't think it matters much to discuss exactly where it's going. Just that once that happens, odds are very high it's going that way, and the move is going to be large. I mean, if you think about it, 9% of all ETH right now are staked. That could turn into 30%. It could turn into quite a supply and demand crisis, and that's what really matters.